Rohr here with an early global view on Tuesday, September 1st, 2015. It's currently 8 a.m. U.S. Central Time. As our regular viewers know, this is later than usual. However, we wanted to see the full evolution of the overnight weakness, which we find a bit interesting because, in fact, most of the data was only about as weak as expected. But there is quite a bit of weakness in equities. The interesting telling part of that is that you don't have the sort of commensurate strength that you had previous in govies, nor do you have the weakness in the U.S. dollar that was apparent early last week. So we shall see. So what does all this mean to the markets and the almost startling opening today after the market pushed back above the gap lower from last week out of that week ago Friday 1971.40 close. It left a high last week Monday at 1950, and last Thursday it gapped up into there, held on a Thursday pullback, and Friday, and even yesterday was only back midway into the gap at the later part of the session. And today, this market is down 50 at 1920. Now, as we'll see on the intermediate term charts, 1920 and 19 even especially are some pretty big levels. And, of course, they're very big here because of the confluence of the up break. The market washed out below subsequent, when it broke up last Tuesday, and spent Tuesday into part of Wednesday cleaning out back below the low 1900s, the Fibonacci 25% retracement. And interestingly enough, as we head out across today, we're looking at an upward channel, the overall upward channel on the hourly chart being up into the low 1900s throughout the course of the day today. And we do note that as of yesterday, it was interesting that the hourly MACD, which has been, of course, all over the place, from the failure actually on the FOMC going back to a week ago Wednesday, the FOMC back on the 19th started the ball rolling on the extreme weakness we saw into early last week. But then on the late week recovery, it shot well above the upper runaway band. So below the lower runaway band, above the upper runaway band. Now it's back in there. It's going to be interesting to see not whether, rather it probably will be below the lower runaway band, but whether it stabilizes and starts to claw its way back above it sometime soon. And that pretty much does it for the short-term view of the S&P 500.